What's going on, YouTube? Good afternoon. Welcome back to Stocks by the Numbers. Really hope everyone's having a good Monday here. Nice, beautiful day here upstate New York. Just rained for like 3 or 4 days. Now I got some clear skies and some sun. So hopefully everyone's having a good day. Everyone's feeling good. If you're not, my apologies for being so upbeat. Believe me, I've been there. But look, stay sharp. Stay positive, okay? Let's wake your mind up a little bit. Name of the company I'm bringing to you today. Enovix Corporation, ticker symbol ENVX, listed here on the NASDAQ. Now, this company produces silicon lithium-ion batteries that they feel are going to be more efficient and more productive than current lithium-ion batteries. Okay, let's see what's going on. Stock right now trading at 1140. Seems to be bouncing around today, up 16 cents or about 1.4%. As you see here, last article, March 10th, Enovix stock jumps on its first high-volume production facility. Okay, again, its first high volume production facility. So, this almost falls into like one of those EV companies that isn't really doing anything yet. The difference is this company actually has started bringing in a couple of $1 million here or there, selling their products, and supposedly have big plans for the future. Even analysts agree on their estimates. But let's look at some of the numbers here. Market cap at $1.8 billion. Companies losing 33 cents a share. We've seen worse. We come down here on the EPS side. You can see a little sporadic, basically slight pullbacks here, quarter over quarter. However, they did come in above estimates 3 of the last 4 quarters. Last quarter here with the slight miss. Next quarter, minus 22 cents. So still estimating a little bit of bleeding moving forward here next quarter for the company. Moving down here to the revenue, you can see $5.1 million back here, $8,000, $1 million. Okay, so these sales are coming in sporadic here for this company. As you see here, back here, earnings, nothing going on. There's your $5 million off of only a couple of $100,000. Excellent surprise. Then you come back with, a couple of $100,000 more, and you only bring in $8,000. Then estimates jump up to $9,000, but somehow $900,000, but somehow the company comes in with over $1 million. So we are seeing some sporadic revenue come in. However, we are seeing revenue come in. Now, before I get to the chart here, I just want to check out some of these financials very quickly with you guys, because I want to show you that, look at this down here. Obviously, cash flow is negative, but cash is being held. And look at the debt. Only $9 million in debt. Company has almost $400 million in cash here 2 years ago. Fast forward to last year. Debt has gone down slightly to $8.2 million. Company's still maintaining a couple of $100 million in cash. If we look at the assets also, you can see assets seriously outweighing the liabilities in the short term and about a 2-to-1 ratio here in the long term. If we add those up, assets right now are sitting at, I believe, north of $440 million. Looks like liabilities are about $85 million. So the company has a very good assets to liability ratio. One like that I haven't seen in a while. But switching over here, we look at the income statement, and we can see, again, revenue really non-existent. Now it starts to come in. So, again, the fact that they're doing business is definitely a good sign in my eyes. However, you're starting out, you're bringing in a couple of million. You're telling me stock is worth a couple of billion. I don't know about that. So that's why I wanted to check some of the numbers with you guys. Cost of goods sold obviously increased as goods are sold, and you can see here minus 23.25 million right now. Gross profit is this number minus this number, obviously it's negative, minus 17 million. Operating expenses massively exploded, sitting here now at over $100 million in cost. So that's why this company, they need that new facility, because once that new facility is up and running and they're more into a mass producing company, then you're probably really going to see these numbers come in. That EPS loss is really going to start narrowing. And even analysts are estimating that this company is going to be wildly profitable inside of the next couple of years. We'll get to that in a second. But overall, again, nothing too crazy going on. Again, the company's holding about $500 million in assets with very little liabilities, which in my eyes is a really good sign. However, book value sitting here at 2.25. Company right here 1138. Right? So this is why I'm not saying it's not a buy. It just may not be a buy at this price. Right? Why buy at 11.38 like I always say when I could buy at 9.38, 8.38? Switching over to the cash flow we looked at before, basically all negative really across the board. Some cash from financing. 300 times sales, 5 times book, enterprise value. Now this is interesting because the enterprise value, if you guys recall, I'll bring this up for you, is a metric that is used to assess the total value of a company by factoring debt and cash. It can give a more clear picture of a company's true value. And see, they do this, they tell you what it means is because it's believed that enterprise value can be used to calculate how much a company will cost if it is bought out by another company. It is different from market cap because it factors in other variables like debt and cash. Okay, well, the company is operating at a loss. They're holding, over $400 million in assets with about $80 million in liabilities, and they have about $300 million in cash. So at a $1.8 billion market cap, I'd say they're probably worth half that. So I don't know if the stock is going to drop 50% back down to 5.5 or half of 11. However, that's why I'm saying it could be lower. It could be lower. So I would much rather buy this stock in the single digits than up here in the 11s, regardless of any recent news that has come out. Return on assets have been bouncing around, however, decent as of late. Same thing with return on equity coming down and return on invested capital coming down. The gross margin heading in the right direction was drastically negative, still is drastically negative, but heading in the right direction. The operating margin heading in the right direction. EBITDA, once again, earnings before interest, taxes, depreciation, amortization, heading in the right direction. Net margin percentage apparently was minus 1,000,000%. Now it's minus 1,000%. So, I mean, I guess that's a couple less zeros. But here's the one metric that I wanted to show you guys. Inventory turnover. Now, when you're talking about a company and their inventory, you obviously want quicker inventory turnover. Okay, now this number is going up, and let's look exactly what that means. Okay, we click on our little question mark, and it tells you inventory turnover counts as cost of goods sold divided by the average of total inventories over the past 2 periods, now calculated for banks. Cost of goods sold over total inventories. But what does it really mean? Well, it shows you how quickly a company sells its stock. A low turnover can mean weak sales, while a high one can mean good sales or insufficient stock. Inventory turnover is an important indicator of a company's performance. So, the lower the worse, and this has been consistently increasing. So what that tells us is that, again, we spoke about them building their facility. They need that facility. That's what we're seeing here, because chances are there may be insufficient stock. Because, again, if they're moving the inventory and the revenue is slowly coming in, but supposedly, everyone's anticipating much, much bigger and better things in the next upcoming quarters and years for the stock and the company, then that means that it is most likely, in my opinion, falling into the insufficient stock reason. And that is why this climb is very, very nice, basically over 100% from 21 north to 59, and then moving, maybe like a 25% jump there from 59 up to 73.3. So very, very interesting metric right there. Company's not paying dividends, but if we look at earnings, we can see, look, basically the same negative EPS throughout the whole year of 2023. But look at the revenue coming in. Right, very low here, 100,000 and change next quarter coming up, and then 600,000, 1.2 million, 1.65 million. So they're really expecting this company to consistently begin rocking and rolling here in the next couple of quarters. And if we switch over here annually, you can see maintaining that minus 93-cent EPS for the fiscal year for 2023 and 2024. 25, it's almost halved. 26 takes a massive jump, and they go EPS positive, 35 cents a share. The revenue jumps from a few million here. Look at this jump, 26, 206, $827.5 million. So this is what I'm saying. You want to know why you haven't heard about this company? This is why. right? Because if they're anticipating huge moves, chances are they don't want anyone to know about it. That's why anytime, first of all, I love that there's so many publicly traded companies, right? Because there's always something to buy, not just a brand name company. And, I love stories like this because it sounds like a great story. The revenue's starting to come in. They're building their facility. Yet, again, you don't hear about it, but they're expecting the company to be wildly profitable in the next 2 to 3 years, which means as an investor, you should own this, right? And I just wanted to show you some technicals here before I let you guys go. And this is when it began trading public. And as you see, it dropped down. That's the bottom. And the next bottom was made. And I drew that trend line across here. And you can see, look at that. You can see the resistance and support that was made at that level all the way back about a year ago, early 2022. And then you can see again, it fought to get back to that level. And then again, you can see a lot of action happening here at this $11 level. And again, and again, and again, and even going to this upward channel that we've been in basically since the ball dropped here in 2023, since January. You can see we're in this upward channel, but right now, again, the stock is bouncing around this level that was drawn from inception, going all the way across. So it is slightly declining. But again, this is why, in my opinion, it could, of course, bounce off this and go to the top of the range here, 12.5, 1260 before it comes back down. But I do feel it should come back down, as we're seeing here, bottom trend line. You're looking at about 9 3/4, fib level 981. That, in my opinion, is where it should be. That's why, like I was saying, I don't know if I'd buy it at 1140, but 940 seems to be a little bit more attractive. And if the company is really only worth 8 or 900 million, and we have $1.8 billion market cap, again, 50% drop, 550 is a little extreme. But even this bottom fib here, 792, I think that is very, very realistic. Very, very realistic. Not only, in my opinion, should it come down to 792, but also, in my opinion, I would be a buyer at 792. So if you're able to put this on the watch list, and it does happen to, slightly pull back out of this trend here and get into the 8s or potentially the 7s, that may be the time to strike, in my eyes. So that's why, I wanted to bring this to you guys. First high-volume production facility, Penang, Malaysia. Fab 2 will support the company's growth and scale up. Enovix expects to begin production in 2024, okay? So you have 12 months from now until they're really able, at least 12 months, until they're really able to produce inventory for orders coming in. 2024. If we switch over here, we look at stock charts very quickly before I let you go. You can see on the daily we have been rising. Just broke above the 50-day moving average, pulled back to $9, was mid-high teens, even into the 20s. The 200-day moving average has basically flattened here, 1327. And as you can see, it recently hit the top Bollinger Band and pulled back a little bit. However, it is basically maintaining this value above the mid-Bollinger Band. So the next test might come down to the mid-Bollinger Band of 1036. And it does look like maybe the MACD is preparing to curl and cross downward, which would begin a sell-off. And that's why, again, if you can have a pullback to like the bottom band here of like 8 and change, 860, 820, obviously, again, you'd rather own a stock at 8 than 11. But coming here on the weekly, you can see this 50-day moving average of 1270. And, it can potentially run up to 1270 and then reject back down here to 10 1/4. But, in my eyes, it really should be pulling back before it goes up. So maybe on the technical side, it has a little bit of strength right now. But RSI at 50, it has been running. In my eyes, it should pull back, even though this MACD is rising here as of late. And also wanted to show you, the RSI here on the daily, again, approaching 61. Up here it was like 66, and then it had the pullback. So that's why maybe in the next couple of days or towards the end of this week, they may slightly continue to bring this up. The RSI will potentially hit that benchmark of 70, indicating that it's overbought, and then boom, it could have a pullback. But, I do like the company overall. I just feel like we can buy it for potentially a little bit cheaper. But silicon lithium-ion batteries, supposedly wave of the future. This company's planning on killing it. Analyst estimates coming in saying that this company is going to be killing it not only in the next couple of quarters, but moving forward into 2025 and 2026. Facility starting 2024. So much bigger and better things anticipated for Enovix here. I would just potentially try to position myself for a couple of dollars less. But hey, if you're involved into this stock and you've been riding this wave and you bought it for the long term because you believe in the company, I gotta say, you may be on the right track, because on paper, it does look and sound good. I will admit it. And I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. Just like everyone on YouTube says, like the video, thumbs up, subscribe to the channel. It means so much. Moving forward, I want everyone to stay positive, stay focused, stay disciplined. I want to thank you so much for stopping by. Hope everyone makes a couple of dollars. I'll see you guys in the next video. Take it easy.